Good morning, ladies and gentlemen. My name is Almaz Jolamanov, and I will be moderating today's webinar. Few technical announcements before we start. So, translation available to Russian and Kazakh languages. You may select language interpretation button on the navigation panel of Zoom. It is indicated by globe icon, and also you may ask questions through the chat function. And we will collect all the questions and respond to them in the end of the session. Today, our webinar is called Investing Smart, Protecting from Frauds and Scams. I think this is a very topical issue that we want to discuss. The issue is very topical because of the pandemic, because of the frequency of online trading increasing. And also we see that there's a lot of frauds coming around lately. And I'm pleased to have two distinguished speakers today with me. Mr. Owen Donnelly, who serves as the Chief Counsel of Office of Investor Education and Advocacy of the United States Securities and Exchange Commission, where he manages a team of subject matter experts in providing public-facing content for retail investors on a broad variety of issues arising under the federal securities laws. He's especially focused on investor engagement through the lens of financial technology and media, particularly where digital and social communication intersects with retail investing. He manages national advertising campaigns focused on investor education and speaks regularly on issues related to investor protection, investment fraud, the interests of all the investors, and federal securities laws. Owen has been cited in publications including the Financial Times, New York Times, the Washington Post, CNN Money, MarketWatch, Smart Money Magazine, Consumers Digest, Forbes, and many others. Owen is the author of several articles and manages the Office of Investor Education and Advocacy's Twitter handle named SecInvestorEd. Our second speaker is Mike Howard. Mike is the head of enforcement at the Astana Financial Services Authority. Mike has 40 years of experience in law enforcement and 7 years senior leadership roles in international banking, compliance, and investigations in the private sector. While Mike spent most of his career in Hong Kong, he's also worked in the international financial centers like the Qatar Financial Center and Astana International Financial Center during the last 3 years in the enforcement function. In June 2019, Mike joined the AFSA as the Director of Enforcement. With this introduction, I'm pleased to hand over to Owen Donnelly, who will talk about identification of online frauds, a theme which is particularly topical during the pandemic circumstances. Owen, the floor is yours.
Wonderful, thank you. I need to be able to share my screen, so I think if we can take over. Good morning. It is midnight in Washington, D.C. here, but thank you so much for the chance to be a part of this event and to talk a little bit about what I've seen and what we're seeing on digital and financial fraud. I am required by U.S. law to give a brief disclaimer, and that is my comments today are my own. It is a service to investors, and the presentation I'm about to give is not a statement of official SEC policy, a legal interpretation, or investment advice. I'd like to start with a brief overview of what the SEC does, a little bit about what my office does, and then get into sort of the heart of what I think is most interesting right now. And that's really showing what type of online fraud, and by online fraud, I mean, to a large extent, fraud targeting retail everyday investors using social media. And then some of the things we're doing to address it. I do understand that sometimes talking about retail fraud it can be a little dry, a little uninteresting. And so what I'd like to do, and I did so for this presentation, is, as almost said, I do tweet for the SEC for our education account. So this morning, I got onto Twitter and I did some searches for things like guaranteed returns and Bitcoin and Forex, just to see how much content I could see that looks suspicious. And I'm going to go through some examples of what I just found this morning and some from the past that I think are interesting. But as background, the SEC was established in 1934 following the Great Depression. With Congress established it with three primary functions. One is to protect investors. That sounds in enforcement in many ways. Second is to maintain fair, orderly, and efficient markets, and that is keeping the markets running. And finally, the last is facilitate capital formation. This essentially means to get money and capital to its highest, best use in the public markets. This is one of the core tenets of the SEC, the one that is not discussed as much when we talk about fraud. And I do think it's important to remember that for every retail investor that is defrauded, that is money that could have gone into the capital markets, of your country, of other countries, in the legitimate world. And so I think whether you're talking as a regulator or as a regulated person at a broker or advisor or a company or investment company, fraud really does not just hurt the victim, but it has a severe detriment to the market in very tangible ways. And so one of the ways I look at investor education is that we're helping to get money and capital to its highest, best use in the markets. Very briefly, and these stats are a little old, but the assets managed by SEC registered in DC, asset managers is around 84 trillion, mutual funds about 20 trillion, and annual trading volume, and this is, I believe, fiscal year 2020 was 97 trillion. As we all know, the last year has been incredible. There has been a huge uptick in retail volume, and so I would expect at the end of the year, the numbers will be even larger. Very briefly, and I know you'll have access to this information, the SEC regulates a great number of different entities, including advisors and funds and brokers, as well as several thousand public companies that issue reports. Breaking it down a little further, how do we accomplish this? We make rules, we review disclosure, we have an examination function, so we'll go in and look at a broker and look at an advisor, and enforcement. That's what the SEC does, but what our office does is a little bit different in that what we do is talk to investors about core educational content, and a large part of that is anti-fraud. In fiscal year 2020, we received about 22,000 complaints. This year, we've received over, I think, 80,000 already. Now, in large part, this is because of the upswing in meme trading and some of the other events in the markets over the last 6 to 8 months. And finally, I'll refer to our website, investor.gov, a good bit. That is where we house all this content, and it's available for free. So I mentioned briefly digital landscape. Before we talk about fraud in the digital landscape, it's important to know how fast the space is growing. So if you see in equities, non-debt trading, 2019, the average daily trading volume was around 7 billion. In 2020, it was 10.9 billion. And by, I think it was April of 2021, we were almost at 15 billion. So you see exceptional growth in retail trading, and that's going to be important because the more retail trading there is, that means there's more interest, and where there's more interest, fraud will follow. Now, I do like to talk a lot about social media because there's so much of what we warn investors about on social and digital, but it's important to know why. So one of the things we know, retail investors increasingly use social media to make investing decisions. So a couple statistics that I think are somewhat interesting. About 3/4 of investors, 75% of investors have social media accounts. About 90% of advisors, so those investment advisors seeking to have customers or clients, say social media provides a key role in their marketing efforts. And that's important because if social media did not work to reach investors, the people getting paid to reach investors wouldn't be using it. There's also a real cutoff or an interesting data point wherein affluent, and this is US-based data, but affluent investors, that is more wealthy investors, had made a decision based on a financial decision based on something they learned in social media. And even digging farther into that, 74 mass affluent, that is really very wealthy people, use social media. And when you look at who's using it, who's using social specifically for investors, you get data including maybe 1/3 of all retail investors. So wherever you are, we need to understand that more and more investors are using social media to make decisions. And then there's one more data point that I like, and that is 75% of investors are looking for their financial advisors to give educational content online. Now, I obviously work for a regulator, but I take that statistic to mean that they're expecting the SEC to do the same. And what another factor, in addition to just the general use of social, is the increased use of investing apps. The vast majority of young people, and I think in many international jurisdictions, are using apps and phones to invest. Less and less face-to-face, certainly, and obviously the pandemic has magnified that effect, but less and less even desktop. I think we're seeing more and more use of mobile, and because that's where investors are getting information, because that's where investors are trading, if we want to reach them with an investor protection message, that is, we want to help them protect themselves and better identify fraud, we're going to have to go where they are, and where they are is on mobile. Very briefly, and this is a little bit outside fraud, as I'm sure you have all noticed in the U.S. markets, there's been significant volume and volatility. One of the things we sort of encourage investors to understand, and this is, whether you are at a regulated entity or you're an investor yourself, is that short-term trading based on social media, even with based on fraud, is very unlikely to be successful over time. There's really thorough data that day trading, that's rapid in and out trading, especially based on rumors one might see on social media, over time is exceptionally unlikely to be successful in terms of generating profit. And what you'll often see are, in the gray area right between fraud and marketing is folks on social and digital claiming to be able to, regularly advise on rapid trading to make a great deal of money. These are red flags of fraud, or at least recklessness. Now, so why are criminals, why are fraudsters increasingly using digital communication to create fraud? Well, the first reason is obvious. It's because investors are social and fraud will follow investors. There's a famous expression in the United States you may have heard, that is, when the police captured a famous bank robber, they said, "Willie, why do you rob banks?" And his answer was, "Because that's where the money is." And that plays through to it's just a general way of saying that criminals follow money. So the fact, if investors are in social media, criminals will follow. Second point is reflecting back upon the data set we were discussing earlier, is that investors on social are often affluent and mass affluent. That is, they are actually investing. And they're more wealthy. Another reason, more practical reason, is, and I'm sure many of you know this outside the context of investing. If I were in the room with you, I'd ask you to raise your hand if you had not gotten a fraudulent email in the last 24 hours or some sort of scam-like email. At least my email, my Gmail at least, is flooded with them, and that's because it is relatively cheap. A criminal can reach many victims. And there's, of course, the anonymity factor. There's a great deal of self-protection. So you can see reaching out through social is a tool fraudsters are going to reach to. The attribute of that makes me most nervous for retail investors, and I think a lot about older investors in the United States, is the personalization. Most of the data would show that older Americans, and I don't have data with respect to the rest of the world, though I do think these trends tend to, the social media use trends tend to be replicated throughout the world, is that older Americans are not as good as others about privacy settings. And even if they are, we all know, today was an interesting day, certainly for social media, how much personal information may be available on any account. And whether we're talking about Facebook or Twitter or LinkedIn or WhatsApp, there are so many ways that you share information. I talk about, my aunt sharing where she went to school and where she goes to church and what team she supports. Because her privacy settings were not strong enough, anyone could see this. And this is what criminals do. When you compound the ability to learn personal details about a stranger with social isolation with older investors who don't have a lot of in-person contact, And you combine that with the current pandemic, the current posture, and I know different countries and different regions within countries have different postures, but social isolation has been a real problem and a real issue here in the United States, at least. And so you're talking about older investors who may have funds who are cut off socially and are looking at social media to engage, and that does create a risky setting for investment fraud. So what's the overall harm? So first, there's billions in dollars of losses. The data set I have is slightly old, but we're talking in the United States around $4 or $5 billion with a B. No matter what regulated entity you are, no matter how big your bank is, this is a significant amount of money is left on the table that is going to fraud that should be put into real legitimate investments. Another point, and this is true from emerging markets to fully mature markets, is fraud discourages investing. When investors do not think the market is fair, when they think they can get caught in fraud, they are far less likely to invest. And that is bad, one, for the market, but it's also bad over time for the investor. We know in the United States, there's a great deal of data that one of the best way to secure personal wealth over time is through regular long-term investments in the market. When we see fraud, we see psychological reaction to fraud. When we hear scandals, it discourages retail investing, and that can have a real negative effect on the marketplace itself and also for individuals. And finally, the point I've probably made a couple of times, this is just money left on the table. Every dollar sent to a fraudster is a dollar not put back in the market. And that should be something that whether you're an investor, your regulator, your regulated entity, your public company, we should all be fighting together. Now, this is where it gets a little bit more interesting. So as I said, I tweet for the SEC's investor education handle. And what I like to do before I talk to groups is to just get on, and I pick Twitter, but it could be anywhere. We could be on Reddit. There's a million different places. I just happen to pick Twitter. And I just search for terms that sound suspicious to me. Now, it's very important I make this disclaimer. I have blocked out the actual names of the handles here, and I don't know, I don't know there's been an investigation or any due process. I don't know these are frauds. So I'm required to say that. But I think if we read some of the language, I think it certainly indicates some suspicious behavior that as regulators and investors we should be careful of. So this is a tweet, and I enjoy reading them. I hope this comes across okay. It's harder on Zoom, and if we were in the same room, I'd hold it up on a screen and could point to the words that I find exceptionally funny. But for example, this says, "This is a real chance to make real profit with just little investment on Bitcoin. With a minimum of $500, you can start up a trade that can get you a profit of $19,000 within 14 working days." So that's almost impossible. I think we all know that. Those of us in the regulated space know that such a promise is ludicrous. But that is something that's pushed out on Twitter today. You'll also notice it says in the graphic, promotion will expire soon. So one, there's some sort of language issues there that a native English speaker would see. And I'm sure, and these exist in almost all languages, and in any language. Looking at sloppy grammar is actually a real red flag of fraud in many of these. But you see, promotion will expire soon, and that is absolutely a tactic of fraudsters, is to say you must get in now. This is going to expire. There are very few investments for retail investors that expire quickly. There's very few investments you have to get into right now. So we often point that as a red flag. And these are sort of fun too. You'll notice the avatar, the picture on the Twitter handle here is Darth Vader. So that might be a red flag when Darth Vader is giving you investment advice. So some of these, even what they say, just so interesting. So I'll just read this out loud. Even the public group got these charts, and we're already 100% risk-free. I'm not sure what 20% risk-free would mean, but they're 100% risk-free. Our stop loss has been moved to entrance price, so we can't lose. All caps, another sign of aggressive marketing. Guarantee to win in this bearish market. Who wants to challenge my trading strategy / model? I'm guessing no one. Bam. So again, this is a crypto tweet. I'll try to block out most of the names. This is just another example of the noise that real investment opportunities are fighting against and regulators are fighting against. I'll do a couple more of these. This is pretty good. Have you been trading online and you don't earn or had lost something to binary options? So in the United States, especially over 2 or 3 years ago, so it was, I think probably what would be called the peak, was binary options, there are a legitimate product called binary options. They're primarily a hedging product, often an agricultural space that sophisticated users, sophisticated entities sometimes use. It's very hard to see a use case for retail investors, but there were a ton of scams. And what they did after investors started catching on that binary options were a scam, they made up something else. And this doesn't even describe what the trading system is. It's an automatic system with a minimum startup. $500 earns you $95.40 weekly, and $1,000 earns you $17,000 weekly. It says Bitcoin and Forex. So the indicia of fraud are obvious. Such returns do not exist. And what would happen if you were to DM this person is they would take your money and walk away. This one I actually just got a couple hours ago. I think early this morning. It was one of the last ones I pulled. And this I found interesting. It doesn't really say anything. This is what's really it's so vague. How long to become crypto rich, guaranteeing profits. So it doesn't really say anything. They use a great deal of hashtags trying to get as much traction as possible. And then another red flag, the graphic you'll see says, how to guarantee profits in crypto. So guarantee is incorrectly spelled. Another red flag. But it's worth noting that sometimes the frauds don't even say what they do. They just say they're guaranteeing profits. And these are signs, these are marketing signs you will not see in legitimate investments. And it really is one of the easiest ways to weed out fraud. Some take a more philosophical bent. For example, this is one that I've been around for a while. Your new life begins today. A successful businessman or billionaire who owns a lot of stocks and gems, but that is the past. Everything's changed by safe investment and 100% guaranteed profit. I think you see the point of this one. And of course, obviously, we're seeing more and more in the crypto space. As digital assets and cryptocurrency begin to dominate retail experience, you're going to see more and more fraud. Again, I do not know anything about this particular handle, and I've blocked it out. But you can see at 7 a.m. this morning in DC time, I pulled this up. A company with many years of crypto experience. A 100% guaranteed profit and withdraw in 20 minutes. Wow, that's amazing. 100% profit in 20 minutes is an exceptionally impressive promise. Again, obviously a red flag of fraud. Some of them are a little more subtle, but still, pretty spottable. For example, and there's actually a series of tweets here. The chart is where the gray and blue box is what's worth looking at. So they're saying 20%, our competitors offer 20% returns with zero guarantees, but they'll promise you only 8.75%, but 100% guaranteed. And as we all know, a guaranteed return, even at 8.75%, it actually says within a couple of days, is another red flag of fraud. Okay, this is the last one, but this is the funniest one, so I insist. If we were in person, I'd play this video because it's so funny, but I can't do it. So this is binary options, which I mentioned earlier. And you see the video, and binary options trading system, 98% winning system. And I don't know if everyone recognizes the person in that picture, but that is Bill Gates, the billionaire founder of Microsoft. So what one might do is I want to hear what Bill Gates has to say about trading binary options. Now, shockingly, when you click on Bill Gates, it's not Bill Gates. This is someone else, and I've blocked out his picture. Now, what's also very funny is I actually didn't create these closed captions. They did, so I didn't even have to do any technology. I just screenshot this and covered the face up. I'm going to read some of the words. I think they're hard to read, but they're pretty funny. So you click on Bill Gates for the investment opportunity, and it says, now you've landed on this page because you've received a personal invitation to be one of our 15 beta testers. Someone believes you sure could do with a lucky break. So just to be clear, I just scrolled around and clicked on that. No one sent me a link for Lucky Break. Obviously, more than 15 folks did it. It's a pretty interesting setup. Again, he says this is not a joke. This is 100% guaranteed. He's selling software. It's like nothing you've come across. Then what the video does is purport to show screenshots of traders making $10,000 to $70,000 a day with the first ever instant profit software. My favorite part of this is our principal says, I must warn you, this is a private page, and this video will be removed from the internet and never aired again once it reaches 250 views. Now, I will say, I've probably looked at that 250 times myself. And if anyone knows how to remove something permanently from the internet, that's the occupation they should be in, because that's a genius move. Any case, I just like to show those. Those are what's out there. Again, some of those are fun, and they actually get far more risque for an audience. Some of them really do go really far out there. But those include things that I found this morning at 7 o'clock this morning in Washington. I got on Twitter and found those. So those exist. What I didn't show is how often they're tweeted. For some of those, the handle will push them out at 7:01, 7:02, 7:03, and they'll do so all day long with very slight tweaks in either the website URL or the language. And they do that because the social media companies have gotten much better at spotting these things. But as is to be expected, really, the criminals are a little faster. So they know if they tweak the URL, it doesn't get picked up as much. So those are going out every day. And if you think of how many different fraudsters are out there, there's just so much content, so many criminals trying to find retail money. So here's a couple things that we did. So at the SEC, one of the things we worried about in terms of fraud was the prevalence of scams in the initial coin offering space, a subset of digital assets and cryptocurrency. And one of the things we knew that there were, at the time we launched this, there were, I think, 2,000 ICO, initial coin offer projects. So they range from, there were real projects, there were projects that weren't really being handled well, to just absolute fraud. And we were really focused on absolute fraud. So what we did, and I personally looked at a couple hundred of them, is we made one. We called it Howie Coins. Howie, if you are a securities lawyer versed in U.S. law, there's a very famous Supreme Court case called Howie, and it's how the Supreme Court of the United States determines if an investment is a security. So we called it Howie Coins to be a little funny. Most criminals wouldn't know that. In fact, if you're not a lawyer in the United States, you might not. So we say the pre-ICO sale is live, and there's a bonus that ends in a certain period of time. These are very common attributes of some of these ICO pages. There's often a bonus. There's a time pressure to buy. We layered the pages with tons of what we call red flags of fraud, or just indicia of fraud. And it's still up, by the way, at howiecoins.com. It's still there. You go look at it. It's sort of fun to play with if you have some time. Well, we said that it's SEC compliant and registered with the government. That, of course, investments don't register with the U.S. government in any sense. It says they can be spent at any airline or hotel. They can be exchanged for cash. We just made all this up. None of this has any bearing in truth. We had discounts and pictures of beautiful islands. So the gold investors got a single 25% discount. It's pretty funny. The silver got a double 12.5. Which we thought, I saw that. We saw that a couple of times. I don't know what the difference between a single 25 and a double 12.5 is, because the math would lead you to think it'd be the same thing. They often have founders. This is actually the team of web developers that helped me build this. Unfortunately, that is me on the far left, is Josh Hines, and these are web developers who help us do the page. They often, the fraudsters will just make up names and people. In fact, one of the ways they get caught is because you can use certain technologies like the Google Face algorithm to search for pictures, and you can find the pictures they're using are not actually, they're actual models, or they're other people. It's one of the ways that you can track some of this stuff down. And then the most important part was, how to get in touch with Howie Coins. So people would see this and they say, oh, you may know, I think we've got a minute or two more, so I think this is fun to explain. one of the interesting parts of some of these ICO offerings was that the users would get together on different channels, perhaps Telegraph or Reddit, and they'd say the time where they were going to do the pump. They'd actually say they were going to pump the price up at a certain point, certain time, and then get out. So that was the moment to get out, and they'd say it. On the United States federal securities laws, that is almost admitting to what we call a pump and dump. That is to hold a security, usually a thinly traded microcap security, to lie about it with the idea of pushing up the price. When the price gets high, you walk away. So you pump up the stock and then you dump it. It's a classic securities fraud. And what was interesting in the ICO space is how readily folks would admit it. So at the end of the day, what we wanted people to do was to type in the email and press submit to learn more. And if they did that, as you all probably foresaw, they did not go to a place to buy coins, but they went to investor.gov, the website we ran, and we said, if you responded to an offer like this, you could have been scammed. These are fake. And this was, we did get several million views on this. We got a great deal of impression traffic on Twitter. We had some of the creators of Ethereum push it out by happenstance, which really helped us. But this is just an effort to be in the space. And so what did we do when we got them there? We talked about some of the things we've already gone over. What are some of the red flags of fraud? High guaranteed returns. Another one that we actually have not mentioned is celebrity endorsements. In the United States securities markets, there's been a ton of a celebrity says, "Oh, you should definitely invest in this." You can see cases we've brought, and just to be clear, so the fact that a celebrity endorses a novel investment is certainly not a sufficient reason to invest. SEC compliant, often criminals will say that they filed the right forms or they're registered. And in the United States and in other jurisdictions, much of this is easily checked. For example, if someone says they're an advisor or broker, you can search for that. You can call your regulator. We have a website. You can type it in the United States. You can type it in investor.gov. So these are sort of calls to action for investors. If someone says they're registered, make sure they are. Investing with a credit card, that's something, and I don't know if that hits outside the United States, but we had found a huge number of what we call TCRs, tips, complaints, things coming in where we're trying to get money, either a wire transfer out of the country or using a credit card. Finally, and I'll do this very quickly, we also do some sort of straight advertising, and we play these all over social, though we have put some on TV, but TV is very expensive, trying to make jokes. So this is one of our ads, trying to encourage folks to do a background check. You might know this is RJ Klein's 401k. In the United States, a common retirement account is called a 401k. So sort of the theme of this ad is that the criminal is using the retail investor's money. I hope this comes through. I know we've got some technology. Let's see. Oh, shoot. Let me see if I can get it back. There we go.
I can guarantee it at least doubles. I've got big plans for your money. Don't let someone else live the life you're saving for. Find out if you're dealing with a registered investment professional at investor.gov. Before you invest, investor.gov.
And stop. Pardon me. And then we have some sort of straighter content that is more just trying to encourage traffic and investors to investor.gov to ask questions. And this is what this looks like.
What's a target date fund?
It's a hedge fund.
A mutual fund.
An index fund? What should I ask my investment professional?
How do I know if they're even legit?
Edgar? Who's Edgar? How do I read a 10K?
What about fees?
What's an ETF? 529 plan?
401k.
How do we plan for retirement?
Where do I start?
Empower yourself with the free tools and resources on investor.gov. Before you invest, investor.gov.
Just a couple quick points. So that's really what we're doing in the digital and social space. We're just trying to find little bits of content, and we've continued over this year to build more to be where the criminals are. That is, where the investors are, where the criminals are is on social and digital. And so we're trying to flood the zone, as we say, to get as much content as possible. You can do the background check I mentioned for United States registered advisors on a phone now. This is our website, which is our main repository of information, and everything I've said here is on the website. These are some particular resources I know you'll have access to. But again, all of this is investor.gov. These are just alerts around some of the subjects we talked about today. And finally, that's my email address, donley@sec.gov. I'm happy to take emails and questions. We have an investor assistance line if you have questions about U.S. domestic markets, help with a particular investment. And this is our social media. So I'm going to stop sharing my screen. That was sort of what I wanted to talk to you guys about today. And looking forward to Michael and then some questions later.
Thank you, Owen. Really, really interesting points, especially around how much money is there actually, not in the legal market, but going around the legal market, and good demonstration of red flags, really. And I believe that fraudsters are not being so creative, because in AFC we're also seeing some of the cases where people are just promising guaranteed returns, and I think that that will take us logically to how we enforce that, and Mike will further talk about a role of enforcement in the consumer protection. Mike, over to you.
Yes, hi everybody. Is that my presentation? Yes. Can I have the second slide, please? Okay, I thought it was quite important, before I said too much, to go back to the basics and the objectives of the AFSA is all enshrined within the law that we work around, which is the Financial Services Framework regulations. So I wanted to quickly flip through them to show that these really are consumer-based, mostly indirectly, but some very directly. So if I could have the next slide, please. So these are the ones that are in our law. They all speak for themselves, so I'm not going to talk massively about them. You will hear the terms fair, efficient, transparent throughout the objectives. And obviously one of the reasonings behind a regulator is that anything we do must be fair, efficient, and transparent. And that goes throughout our ethos. Next slide, please. Fostering and maintaining. Again, it's all indirectly involved with the consumer. Preventing, detecting, and restraining. The third one is probably the most direct one, protecting the interests of the investors. And that is basically the crux of my presentation within the AFSA context. So a lot smaller context than we've heard from before from Owen. Next slide, please. And these are the final two objectives: fostering the development of technologies. That's the fintech side, which is gaining a lot of support and development in the current environment. Pursuing other objectives, that really is a bit of a catch-all. I won't go into details because my time is a little bit limited. Next slide. We achieve our balance based on risk-based assessments. So our supervisors, our supervisory departments, they actually supervise closely the authorized firms. And what I mean by authorized firms is firms that are authorized to provide financial services. If customers come to AIFC and want to invest money, they need to have some comfort, actually a lot of comfort, that the firms they're investing in are properly regulated and properly there is proper oversight over those companies. And that's the way we're set up. We're basically a risk-based regulator. And we focus on the risks for each company that we authorize. Next slide, please. Obviously, the ways we support investors. When an investor has an issue with a company in the AIFC, they first of all need to report it to us. We may already be aware of it, but the more reports we get, the more action we can take. And whilst we read down this slide, our role is to take prompt action. Now, the slide before, please. Thank you. And if you see the use of the word swift, now swift, I would also interchange with professional, but part of the challenge when we are given information about misconduct is assessing it and assessing the level of misconduct as quickly as possible. So that means identification of the persons, companies involved, particularly identification of missing assets, including the amount and locations. The impact on consumers, incredibly important. And what action do we need to take to cease the activities that are impacting on the consumers? And obviously, action to prevent further losses, which maybe we will engage media and social media to issue warnings. So we have a lot of tools for the customer within the regulation of the AIFC. Next slide, please. We also have ability within our law to, once assets are identified as being involved in misconduct, we can take swift action to identify and freeze them. The purpose of this is obviously to prevent disposal of them or transfer or dispersal to other people. And we will do this normally in the form of application to the AIFC court, who would hear submissions from us and decide whether they will support it or not. This can be a very, very quick procedure. And again, depending on the size of the misconduct and the size of the firm conducting the misconduct. Next slide, please. We also have the ability where certain individuals are identified as being involved in different frauds. If they're foreign nationals, steps can be taken to prevent them leaving Kazakhstan so that we can finalize our actions against them. This is a very important issue, actually, and it works in other jurisdictions in a very similar way. But again, this can be done very quickly if it is proven that the misconduct has resulted in assets being taken from customers or clients. Next slide, please. Obviously, similarly to every other country, the Kazakh National Criminal Code takes precedence over any smaller jurisdiction within the state of which we are one. So we have a duty in law to inform the appropriate law enforcement or government agency as to any misconduct. This would include people like the Financial Investigation Unit, where money laundering was suspected, or the Corruption Agency, or possibly where there is fraud, the Ministry of Justice and Law Enforcement. And we are currently in the process of obtaining and finalizing agreements to share information with these agencies. Again, all this is in support of our customers and clients. Next slide. When we investigate a firm, a financial penalty may be leveled against the firm or approved individuals in the firm, but the penalties will reflect an amount suitable to give back to the people who have lost as a result of the misconduct. So we consider two aspects when we consider the size of the penalty. And the size of the penalty is considered not by enforcement, but by the decision-making body within AFSA that deals with this. But they would ensure that the majority of the money went to consumers who had lost, if they had lost. So assets would be dispersed in the fairest way possible, providing we can contain the money. Next slide. We have a complaint structure. People can complain through our website for any reason. We also have a 24-hour number on our website where we employ a third party, Deloitte, to run a whistleblowing hotline. Our whistleblowing laws are enshrined in our regulations and are similar to those internationally. And I'll move on to those next. Next slide, please. So speaking up is the same as whistleblowing. I prefer the term speaking up. We have the regulations in the AFSA. We have all the principal protections afforded by similar international acts anywhere in the world. Mainly the guarantee of confidentiality and the protection of somebody who speaks up from reprisals. So that's another way that somebody can communicate with us to illustrate instances of misconduct. Last slide, please. Okay, the one area I would like to stress as sort of the end to my presentation is that AFSA, the Financial Services Authority, is responsible for regulating mainly firms that are involved in financial services. the AIFC itself, center itself, has over 1,028 registered companies. But of those 1,028, less than 50 are authorized to deal in financial investments or other types of financial investments, such as crowdfunding or advising on investments. So it is really important, if you are considering going with a firm in the AIFC, you go onto the public register and check and make sure that the firm you are investing with is authorized to do what they are advertising to do. So it's very easy. It's on our public website, very easily accessible on the main website. And it will tell you whether they will provide the service or not. I think that is the key issues I wanted to raise. We're running out of time, so I'm going to leave it there and ask if there's any questions for either Owen or myself, please.
Great, Mike. Thank you very much for covering the role of enforcement in consumer protection. We have a question, or maybe rather comment from Ms. Yusupova, who is watching us. So she's referring to Kazakhstan. She's asking that maybe you could elaborate more on issues in Kazakhstan, like financial pyramids, bloggers who advertise and recommend certain products. Of course, Kazakhstan is not our jurisdiction, but AIFC has its own jurisdiction for financial services. So, when the cases are at enforcement stage, excuse me, they go through enforcement committee, and you handle that. So maybe you could elaborate based on the cases that you have seen on how we deal with the various pyramids or some improperly advertised financial products and services.
Yes, certainly. We are a very junior international financial center, so this is largely a lot of new ground for us. But in recent experience has shown us that those types of websites that offer high returns, no risk returns, are becoming more and more common. And the simple fact is that they are, in our view, fraudulent returns. So we take action straight away on finding out about them. We issue them a cease and desist letter, i.e., stop what you're doing, and then let's discuss why you're doing it. And I think that side of the enforcement will grow with the number of cases. Does that answer your question?
I believe that response fairly well. The question from Ms. Yusupova. Yes, and then maybe I'll ask for the question to you. Why is it? And since we're talking about AFC jurisdiction, so why is it safer to invest in companies registered in the AFC?
I think it's safer because at the end of the day, the AIFC is run under an English common law system. And I think the English common law system is well respected worldwide for its ability to provide fair and timely judgment, particularly in the areas of arbitration and mediation, which they are set up to do. And in that respect, I just think that investing in the AFC is a good thing because it gives you access to those, but it also gives your clients access to that redress, which I think is very, very fair form of redress.
I guess it would be fair just to mention that not just the registration, because the fact of registration is not itself the authorized status, but the investors should pay attention to whether the firm has a license to carry out financial services.
Correct. There are over 1,000 registered firms, but as I said, only under 50 are actually authorized to conduct financial activities, including crowdfunding, including advising on investments, managing on investments, taking clients' money. Now, these are regulated by us correctly, but there are many of the other firms who do or are showing a tendency to say that they are registered with us and invite investments when they are not authorized to do so.
Yeah, right. Yes, and but I think the role of financial education and literacy remains very important, because we can always enforce things, shut down the websites, issue cease and desist letters and orders. But after all, if people also don't take actions to educate themselves, they still face the risks of.
If they're on social media, and as long as we publish what we're doing on social media and on our own website, I think that's one step towards getting the message.
And then, from this specific examples, let's go back to maybe broader scale. I'd like to ask a question to Owen. Owen, what trends in online fraud have you seen since the global COVID-19 pandemic? Can you elaborate on that?
Sure. I mean, so the first thing is the scale, and there is just simply more retail trading, and that provides the opportunity for more of these frauds. It's interesting to hear you and Michael talk about the types of fraud you're seeing, because that guaranteed return unregistered firm. I mean, that is a huge subset of fraud in the United States, and there's been more recently during COVID. The other patterns that haven't at least emerged from data, but I suspect we'll be able to see, is the increase in retail volatility based on meme stock trading and sort of in and out rapid trading, day trading. That tends to lead to not just losses, but the opportunity for fraudsters to get involved. So I think I don't have that data yet, but I think we're going to see an increase in sort of frauds trying to tell people that they have a quick way to get in and out of the markets. I think that type of sort of fake platform fraud will continue. And then finally, it would be impossible not to talk about crypto and digital assets. There's just so much noise in the cryptocurrency space, and it's a complicated space. We could debate for hours the merit of blockchain technology, and there obviously is a great deal of merit, but there's a great deal of noise and fraud, and that's been sort of this outside of the rapid increase in retail trading. That's what we've seen. So those three areas would be the biggest things since COVID started.
Mike referred to using social media, and Owen, based on your experience, how much do you use social media and marketing to combat retail-facing investment frauds? A
ton, a huge amount. I mean, it's become one of the dominant ways we reach investors. We've built, it took us time to build an account. The first reason really is because that's where we find fraudsters act. But now investors are there. We have to be there. It's also very inexpensive. For the same reason that the criminals might like it and firms might like it, it costs us very little money to build out content on Twitter and on other accounts, so we can reach it. And per Mike's point, if you have an audience who's interested in the space, if you put out relevant content, we'll find that they'll come look for it. We do some more traditional advertising. We do things, whether it's about television or radio and webcast, things like that are at scale. But in terms of, what we say, bang for your buck, or getting up the most efficient spend of money in terms of investor education and promotion of financial literacy, and outside of just really one-on-one in-person education, social media for us is probably our go-to tool.
Great. We're talking about social media, and apparently, a lot of people are going online. Do you think there are advantages of growth of retail investing online?
Yeah, I think that's the debate, right? So with all this increase in retail trading, there's increased risk of loss, increased risk of fraud, but it is hard to understate how beneficial it is to have more investors in the market. First of all, the data, at least in the United States, which is that over time, and this is not necessarily short, I certainly wouldn't say in a short term, but over time, investing regularly in registered licensed firms and things like that is a real way to grow wealth. It also builds the markets. So I think we hear a lot about some of the big new high flying retail firms that may have some issues, some compliance issues. They're in the news a lot, and we hear a lot of bad stories about retail investors, including fraud. But if we can focus on financial literacy, if we can focus on our inspections and our registration regime with a robust enforcement as a backstop, I think we should be encouraging as many people as can to be involved in the public markets. It's really win-win for the investor over time, and it's also the way we develop industry. And so I think we should be cautious, but we should also be encouraging.
Wow, very interesting point. Mike, then just again going back to a particular case, if we face a complaint from a consumer, is there an assurance that the complaint will be reviewed properly and not ignored in the AFC? Can you elaborate on that?
Yes, absolutely. Complaints are logged in, and they're logged in individually, and we have service level agreements about contacting complainants to keep them updated on the investigation. And in fact, there will be an annual report of all the complaints. They're also audited by an independent auditor, so that to ensure that none are ignored or fall between the rails. So yeah, I'm very comfortable with the situation at the moment.
Fantastic. Great. I'd like to thank all our viewers, the participants of this webinar, and specifically also our speakers, Owen and Mike. Thank you very much for your presentations and efforts in preparing for this webinar. I think that these are very interesting, information about how people, what should people see as red flags. This typology of frauds are more or less similar, in different jurisdictions. So whatever we are discussing today is relatively applicable in other jurisdictions, and people can face the same frauds, be it in US or here in the Astana International Financial Center. Thank you very much for your contributions. With that, our webinar comes to closure, and dear participants and viewers, our next webinar on financial education and investment decision will start at 2:30. So we break for a few hours, and we'll see you at 2:30. Thank you very much. Bye-bye.